I think we can start, Robert, until more people join us. So let me give everyone a quick introduction. Bismillah ar-Rahman ar-Rahim. Hello, ladies and gentlemen. My name is Adari Mubarak, and on behalf of Jada Fund of Funds, I welcome you all to another Jada Meetup and the last meetup of this year. Today we are hosting Stanford School of Business lecturer Robert Siegel to take us through an overview of the latest trends leading to the current state of global venture capital, in addition to the threats and opportunities. Siegel will also be commenting on the status of climate tech, investing, the current global pullback in tech companies, and the meltdown in crypto and Web3. A few words about our guest today. Robert is a full-time member of the Stanford faculty, a former operator in both large and small companies, and an investor. So this is three unique roles and points of view. He worked in companies like GE, Intel, and several Silicon Valley startups. He spent time studying the GCC region, including writing case studies on our local ecosystem. We at Jeddah worked with Robert in writing cases on Foodex, Cura, and Mirak Capital. He also written cases on Al-Futaim and a local bank as well. Robert have also taught in our flagship training, the Emerging Fund Manager training at Jeddah, where he touched upon the topic that he will be discussing today. So we thought the broader audience of Jeddah can really benefit from his insights and expertise. Welcome, Robert. The floor is yours.
Thank you, Atari. Good morning, everybody. I hope you can all hear me okay, and hello from California. The sun isn't even up yet as I look outside my window, but I'm excited to be with all of you, and it was great to be back in the kingdom when I visited in early October with the team from Java and a lot of the emerging managers. You know, one of the themes that came up in my visit when I was there was trying to get a better understanding of what's happening with global venture capital. And what we thought we would do today is spend about 30 minutes talking about some trends about what's happening broadly, given changing dynamics in the investing ecosystem and the global economy. And then we could talk a little bit about what's happening inside of Saudi and inside of the GCC. Then we'll take some Q&A after about 25, 30 minutes of talking. I also have the Q&A window open on one of my screens, so you can put your questions in there, and we'll do hopefully a little bit of interactive work in about 30 minutes. So without much further ado, let me start sharing my screen. And if all goes well, I think you can now all see my screen, and I'm going to get started. All right, so Thari was kind enough to tell you a little bit about me. Let me give a bit of background. Again, I am the short bald guy on the other side of the camera. I actually have two full-time jobs and no life. I am a member of the faculty, and I'm also a venture capitalist here in Silicon Valley. I'm involved with multiple venture funds, including Exceed Capital, where I am a general partner, and also Piva Capital, which is a venture firm based here in San Francisco, which the sole limited partner is Petronas, the Malaysian sovereign oil company. I did work at other large companies here in Silicon Valley and around the world. I worked at Intel when I graduated from Stanford. I ran a division of GE. I started a company that made the world's first digital picture frames, and that company got bought by Kodak. I worked for a company that made image sensors and image processors called Pixum that was spun out of Stanford University. That company got bought by Sony. I'm a first-time author. I wrote a book called The Brains and Brawn Company, which talks about how companies blend digital and physical. You can get this on Amazon, and it talks about companies all over the world about how they're combining digital and physical solutions for customers. I did my undergraduate work at the University of California at Berkeley and my graduate work at Stanford. You know, if you go into my closet, somewhere in there, there's a tie. I have no idea where the tie is, but the tie is there somewhere. And once upon a time, I used to have hair. Now, this picture that you're seeing right now has nothing whatsoever to do with anything that I'm going to talk about in the next 25 minutes, but I like to put it up whenever I can because it reminds me of the good old days. Let's talk first. There are 5 key messages that I hope to get across to all of you as we go through this, and we're going to go through the data to show it. The first key message is that if we look at 2021 versus 2022, 2021 was out of control, and we'll see this on a global basis on the amount of money and capital that was deployed in venture capital. It was an anomaly. There was so much money deployed, so much more than in any other year that has ever happened, that it's almost an outlier. And 2022 is not a bad year, actually, relatively speaking, but it just feels bad compared to 2021. In the crypto space, I like to say that gravity is back with a vengeance and the froth is over. And the future is unknown. There's still a fair amount of activity and excitement with Web3 and crypto, but there's a lot of people who are wondering now, was it really just a bubble, and was it really just speculation, or what's going to be the long-term play? And no one knows for sure. We'll spend some time talking about climate tech. There's an unbelievable amount of money going in to a lot of investments in the space about transition away from hydrocarbon fuels to different sources of energy, different ways to actually reduce carbon emissions in a variety of industries, cement and other industries as well. But the economics are not that different in terms of what it requires to make those companies successful. Now, the global slowdown is upon us. Like, we're seeing that even though, for example, here in the United States right now, the economy broadly remains pretty strong, the way forward is a little unclear. And no one is panicking yet, but there is a sense that there's a global recession coming, especially as governments raise interest rates around the world, and how that's going to change dynamics. We're seeing layoffs at tech companies and non-tech companies in the United States, but unemployment is still at a historic low here. So that the economy, even though we're seeing some pullback, most people are still pretty positive. And lastly, and this will be an important point, verticalization in venture capital, where companies and partnerships are coming together with growth solutions, mainstream venture, and seed solutions all within the same fund. This is a very important trend that I'm going to want to spend some time talking about. All right, those are the 5 main messages that I want to give to you. Why don't we spend some time looking at the data together and see what it says? All right, this data goes through the third quarter of 2022. And what we can see if you look at this chart is 2022 has actually been a pretty good year. And the projected funding globally through the end of the year is actually going to be about $439 billion, which is less than what we saw of the $630 billion last year. It's a pretty substantive drop of about 15 to 20%, but it's still relatively high if we look compared to the 2018, 2019, and 2020 numbers. So this is kind of one of the first messages I want to get across. Definitely a big pullback from last year, but look at how much 2021 was so much larger than everything else. This was predicated on a fact that we had a world with very low interest rates because inflation hadn't really kicked in yet. And also you had governments spending so much money, the American government, the European governments in particular, flooding their markets with money and subsidies for consumers, led to capital seeking and looking for returns in other places. And this has actually became a key issue for why we got so much money as capital flooded into venture, because you had money looking for returns. Now, if we try to break it down into a little bit more detail, you can see what the trend line is. Now, notice that as we look in 2022, that we see how it's continued to decrease each quarter. That's also why it's starting to feel like it's feeling a little bit tighter. But even Q3, a big drop from Q2 and a big drop from Q1. Compare it to 2018, 2019, and 2020. The amount of money that was deployed in Q3 of this year was actually greater than most of the first half of 2020, going back to the beginning of 2018. And so again, a lot of this is a relative feeling about how we feel on a global basis. The trend line is down. We're seeing a pullback, absolutely. But there is still money that is being invested. What we're seeing here in Silicon Valley and what I'm seeing in other parts of the world where I do business is that good deals are getting done. Companies that don't have a great solution or they haven't found product market fit, that's where companies are struggling to get capital and valuations are coming down. But it's not that it's horrible. So I want to kind of encourage all of you at this point in time to, not panic, but understand that there's definitely a pullback going on. If we want to look at it globally, and we're going to break down some of these in more details, the United States remains still the market leader as to where most venture capital is being deployed, about $36 billion and over almost 2,900 deals. Asia has remained very active. China, even with some of the China pullback, has been quite large. Europe has been very, very solid, though. There's a lot of concerns with Europe with the war in Ukraine and also with heading into winter. What's going to be happening with the European continent? I sense and feel more pessimism when I talk to my colleagues and friends in Europe. In fact, next week I'll be in Central Europe, we're doing some meetings there. I'll get a better sense of it then. But I think that there's definitely been a pullback there, and you can feel that things are a little bit more cautious in Europe than I'm finding in other parts of the world. For example, when I was in Saudi 2 months ago, the energy and the enthusiasm remained very, very high. And so that kind of positive momentum and those positive feelings really helps contribute to the entrepreneurial spirit and community. If we wanted to break down, again, look at the charts differently, you can see a little bit more detail here where the US is about 36% of the deals in terms of deal quantity. And similarly, Asia is about 36%. And then you can see how it really substantively falls off thereafter, with Europe at 20% and then other parts of the world quite small thereafter. Now, this is one of the other things that happened. I wanted us to notice that the average global deal size fell to $18 million. And you see 2021, the average deal size was $25 million. Again, not a small drop. That's a 25% drop in the amount of money that's being deployed. Now, the median deal size, you see, has stayed fairly consistent. But what we're seeing, and what we'll get to in some of the other slides coming up, the larger, big, late-stage rounds, that's where we've seen money really kind of decrease. Valuations were way too high. Rounds were way too large, and the investment community has pulled back if a company doesn't have good unit economics. It's funny, in my class in May, I had a general partner from SoftBank come to visit our class, and one of the things that she said was in April and May, her conversation since the start of 2022 with companies, there was no discussion of growth. Every discussion between the venture capitalist and the entrepreneur was about unit economics. Do people really understand what it means to be running their business, and do they have a handle on the costs and what it costs to acquire a customer and to deliver a product and service, and tying that to revenues? Now, this chart really kind of gives insight into what I was just saying. Notice the drop, for example, in private equity, the fifth set of columns going from left to right. We see the big drop from 35 million to 24 million. VC, we saw a small drop, again, about 20%, not a small amount. But really, angel investing, we're not seeing much of a drop off in size of investments in that range, because the difference between 3 million and 4 million US dollars, not such a big deal. Where we really see it is kind of, in the later stage stuff. Again, asset and investment management, you see the average deal size dropped by almost 50%. So this kind of, again, trying to kind of give you a sense, we're seeing the later stages is where we're seeing the severe pullback. Early stage activity still remains pretty strong on a global basis. Entrepreneurs are still doing interesting things and trying, and capital is still looking for returns. This is some of the kind of the money where we're really seeing this. Look at the number of deals that have fallen in terms of the $100 million plus mega rounds, and you can see that 2021 was completely out of normal. Every quarter with so many big rounds were being funded, peaking in Q4 12 months ago of 106 billion US dollars and 418 deals. Compare that now to Q3 of this year, where we only had 144 deals of this size, and the total funding was about 30 billion US dollars. Now, again, I want you to compare Q3 going back to the first half of 2020, and then into 2019 and 2018. Again, it's not that far off what it was consistently, before the pandemic started, right? And so the pandemic, so much money came in and, got flooded into the system. This was the outcome, was that spike that we saw going up. And this is why we see interest rates going up now. And that's causing globally things to pull back. In mega rounds, most of them remained in the United States, not surprising based upon what we saw earlier. Only a few in Europe, and again, you see some in Asia as well. So perhaps some of the over-exuberance is happening here more in the United States, but that impacts globally what happens in tech and broadly. I would say the feeling in Silicon Valley right now is that nobody is worried, though people are very aware of the fact that there's a pullback. Even my students at Stanford, when they think about recruiting, when they think about jobs, do they go to a Google or a Facebook? Or a lot of these companies are having layoffs. Do they go to startups? Many of them are actually thinking about startups right now because you can still raise money maybe at a lower valuation than you could 6 to 9 months ago. So there's still activity going on, but they're very aware of the fact that they're moving into an environment when they leave the university and go back into the commercial world, that things have slowed down from when they came into Stanford. This is also an important thing to note. The mega rounds, you'll notice in this is where most of the money has been deployed over the last several years. You can see the percentages range from 40% up to 60%. This is where the big rounds of funding have gone, and you'll notice in Q3 how that dropped down to 40% again. I think this is more of a return to normalcy. I think we're going to start to see that, there's still going to be mega rounds, but we won't have the frothiness that we saw previously. So, these slides hopefully kind of give you a sense broadly of how kind of the larger trends are happening on a global basis. A couple last slides on this before I go into regional things. I want you to see that the median deal size dropped from $20 to $29 million, and you can see this in the late stage again on the right side here. Mid stage and early stage, not that big of a difference. Again, this is just another way of looking at the data, slicing and dicing it in a way to kind of give you a sense of what's really happening in venture capital. Unicorn burst, not surprising. Unicorn, a company worth $1 billion US, coined by my colleague and friend Eileen Lee of Cowboy Ventures here in the United States. There were only 25 new unicorns that came and were created in Q3 of this year. By the way, that's not that far off from what it was in 2018 through 2020. That what we saw, again, you see it in the 2021 time horizon, was actually that was the time that was the anomaly, was what happened last year and even the first part of this year. Exits. Everything in venture is about exits. Can we actually create the momentum so that we can actually kind of get money back and send it back to our limited partners? You see that the US is still the largest chunk of exits, about 37%, Europe at 36%, Asia at 15%. Again, kind of consistent with what we've seen so far. More exits in Europe than in Asia. So go back a few slides. Asia showed where a lot of the money was going, but the exits are happening more in Europe. I'm not really sure why that is. I think that might be because there's a closer tie to U.S. and European companies right now, especially with the splitting of the economies between the U.S. and China. I think we're also seeing that European companies have a lot of large organizations there that will do acquisitions. More mature, large, established companies. Let me keep going here. VC fundraising activity. This is an important slide I want to touch upon real quickly. I want you to notice between 2021 and 2022. Look at the number of funds, right, that are there versus the amount of dollars. So you only see a little over 1,000 funds, and yet $223 billion that have been raised. And so what I want us to notice, this is where we're starting to see a lot of the concentration of capital going to fewer and fewer funds. I talked about the verticalization of funds, where we see firms like in the United States, Andreessen, Sequoia, the top tier funds. They have growth end, funds, they have mainstream venture funds, and they have seed funds. This is really kind of one of those things where we're seeing it here, where you're seeing still a fair amount of capital being raised, but fewer and fewer funds. And compare the numbers to the previous years going back to 2012. I think we're going to see a concentration in venture over the next few years, where you're going to see a lot of money will still be there, but there might be fewer and fewer venture funds as verticalization happens in the venture industry. And this slide also gives us a share of this. If you look, most of the money, look at the chart on the left, most of the capital that's being raised is going to funds that are over $1 billion in size. And if that's where the capital is going, they're still going to be looking to deploy it in large chunks. And so I think what we're seeing, this shows the concentration, increasingly so, of what we're of more and more money going to fewer and fewer organizations. And again, in 2022, you can see how much North America and Europe has dominated, whereas Asia was very, very large in 2015 to 2020 as a relative percentage. That's been shrinking. All right, let's talk a little bit about what's happening, some more details. US funding was down 32%, but the number of deals ticked up a little bit. Again, we're seeing a lot of activity here in the United States in the angel and early stage space, and that's actually good. You're seeing an ecosystem that is reinventing itself even through tough times. Silicon Valley is, however, not the only place where funds are going to get done, and this is actually kind of interesting. Even though you see that $10 billion, which is not that far consistent going back to 2018, there's a lot of, with the pandemic, a lot of people moved out of Silicon Valley because it's very expensive to be here, to other locations, be it Miami, be it Austin, though there is a sense, by the way, that people are moving back now to San Francisco. I was talking to Piva, the managing partner there last night. Rents are going back up in the financial district. And you're starting to see companies, as they bring their people back to work, not everybody's going to be able to work remote. It may not be 5 days a week. It might be 3 or 4 days a week that people come into the office, but you're starting to see kind of a return to normalcy. So I'm wondering if that trend is going to start to go back up again. In Asia, we saw that funding fell by 33%, lowest level since Q2 of 2020. Again, consistent with what we saw. And I want you to notice that all of these charts, all of the shapes of them, look very, very similar for all the parts of the world that I'm about to walk us through. That we see this incredible spike in 2021, and then we see the drop off in 2022. But it's not that 2022 is bad. Like right now, the numbers are very consistent with what we saw in previous quarters. Here specifically is China, where China's actually really struggled with the zero COVID policy and the lockdowns. And so now we see China slowly maybe starting to ease up potentially on some of the zero COVID policies. And so that we'll see if that actually helps generate some more enthusiasm and excitement in the Chinese market over the next 12 months. Europe, again, as I mentioned to you earlier, it fell, but still very high. Europe has been a very, very, a lot of energy in Europe the last 4 to 5 years, in particular in entrepreneurship and venture. So relatively speaking, we've actually had a slower decline in Europe in terms of the amount of dollars of what's going on. So the next year will be very interesting. Again, the war in Ukraine, we'll see how that plays things out, and also if there are energy challenges in Europe going into the winter. For LATAM and Caribbean, oh my goodness, here in California, Latin America, Brazil, Mexico, Colombia, so much energy going there over the last 4 or 5 years. 2021, booming, and again, now settling down a little bit. Not horrible, but actually I'm a little worried that Q3 number in Latin America is lower than I would like. It's bigger than it was, say, in 2018. But a lot of my students who are from that part of the world, a lot of them were going back home to start companies. Hopeful that enthusiasm stays high there. Africa, again, many of my former students have gone to Africa. We see that kind of, across the North African region and down. Lots of activity in 2021 and 2022. Still high. Let's see what happens over time. Egypt, let's talk a little bit about kind of, North Africa. Funding down to $61 million in Q3. Not a huge number. We saw the spike in 2021. Again, similar curve shapes, but hopefully we'll be able to see a lot of enthusiasm that'll stay in that part of the world. Let's talk a little bit about sectors. Now we're going to see how some of the charts are going to be very similar. Fintech. Again, we're just booming here in the United States. It was crazy what was happening in fintech in Silicon Valley and across the US. And the good news is I'm seeing in other parts of the world a lot of exciting companies as people are using new technologies for funding and payments, settling back down into a more normal pattern. Part of this was driven by crypto and the crypto boom. In terms of retail, again, similar sort of pattern, though actually number of deals have ticked back up again. So we're going to see if that cycle comes back. We had the DTC or direct to consumer boom, that kind of settled down as a lot of those companies went public and didn't perform well in the public markets. We'll see now over time if that market comes back. Digital health has remained very strong. We see the trend line down, again, consistent with everything else. But most people I talk to are still very bullish on digital health, that a lot of the things that we're learning about the human body and how the human body will work, people believe this is going to be a big source for innovation going forward. So similar trend line. I want to talk about crypto startups. So here's a couple of charts that you can see that just, again, it's imploded. And most of this was prior to the FTX implosion. And FTX's implosion, no one's really sure how much of a contagion that's going to be on a global basis. The funny thing is now we're reading a lot about, well, what will blockchain mean, if anything? How much of it was hype and how much of it wasn't. The number of students that I had last year who were doing Web3 and blockchain and crypto stuff was crazy how many of my students were doing this. This year, not so much. This year, not so much. So this drop off is actually non-trivial, and I actually think this could be a sector that could really struggle for the next year or two until we can find some broad-based application solutions that really get kind of accepted in the mainstream. And you're going to see a lot more government regulation in this space, absolutely, over the next few years on a global basis. Climate tech, lots of activity, and this is not just kind of green energy. It's also about trying to remove carbon from a lot of manufacturing and other things that happen around the world, different types of industries. It's also things about changing how agriculture and food is grown. What's interesting about this chart is the amount of dry powder. I want you to see in the upper right hand corner. The companies in the space still tend to be very capital intensive and still tend to have a long time before they end up actually kind of generating real returns. But there's so much money going in here. The other thing that I'll highlight is that the younger generation, your generation, this is a very, very important phenomenon on a global basis. So my belief is that we're going to see a lot of transitions and a lot of investing in climate tech and other areas, but I'm not sure how the economics are going to play out for venture capital. It's not clear to me that a lot of money will be made in venture capital in this space just because of the amount of money that is required to go into it and the time horizons are so long. But I will say that I do believe over the next couple of decades, we're going to see massive transformation in industries and how things are made, how energy is consumed. And a lot of that's going to be driven by the younger people all over the world. We'll still see developing economies will use hydrocarbons, coal, oil, et cetera, because that's what they'll need to kind of bring, the standard of living up in their population. India, China, that's not going to change. They're going to be looking for low-cost forms of energy, and that right there is almost 3 billion people on our planet. But I think you're going to see a lot of transitions in other parts of the world where a lot of capital was already existing. And so I think this will be a big societal change. Unclear what the venture impact will be. You can see here a couple of more charts on climate tech. Just look at the number of deals. You can see the U.S. VC fundraising, $26 billion and 129 funds, and just the amount of startups. It's a very, very busy space here in the United States and in particular in Europe as well. And again, here's just some more data, which we'll make the slides available. You can kind of go through it and see where some of the investments have been made in particular areas. You'll notice agricultural and food, energy and power, transportation and logistics, just a lot of stuff. Look at the chart in the lower right-hand corner of everything kind of going up and to the right. And so this is still where we're seeing a lot of activity. We haven't seen much of a pullback yet in these areas. And again, some data on a global basis about what's happening, green cement, et cetera. It's very, very active right now. A lot of interesting technologies happening. I'm a little worried that this area might be frothy still. And so you might see a pullback here in 2023. Let's talk about the Middle East. Middle East, okay, great stuff going on. A lot of IPOs. You can see the data right there. There's a lot of activity, a lot of liquidity, which is a wonderful thing. Momentum begets momentum in the venture business. And we can see the number of IPOs in the Middle East over the period to date. This is, a phenomenal chart. What we can see is most of that is happening in places like Saudi and Dubai. This is where a tremendous amount of the activity is. Again, the energy that I felt in the kingdom when I was there 2 months ago was unlike anything I'd ever experienced. I hadn't been back, there in person since the pandemic, and you really could feel how awesome it was to be there. The positive nature of even my former students who I got a chance to meet with, Stanford alumni there, and the team I worked with Jada and the people in our workshop. Just amazing energy, and so I'm very, very bullish. One of my guests in class is a gentleman who runs Baker Hughes, a large energy company. You may be familiar with energy services. And my students asked him back in April, if you were us, 28, 29 years old and graduating, where would you go in the world? And he looked at my students and he said, I'd go to Saudi Arabia. He said, it's just the amount of change going on in the kingdom, and the momentum there is so high right now. So he said that to me in April, and I saw it in October. So I think that's part of reflected in what we're seeing in some of the numbers here. We know that venture capital soared almost 244% in the first half of the year, which is just, that growth rate is just amazing to see. And you know why, with what you're all living through and going through. And we can see some of the data. Look at kind of what the differences between the first half of 2022 and what those numbers were like. It just incredible to see kind of what it's been. By the way, just so you know, I do see the questions and comments coming in the Q&A. When I finish my charts, I'll go over and we'll start doing those, and I'll take some of those. So please keep your questions and comments coming. If we look in terms of the number of deals that we see, look at just kind of that growth rate in the first half of 2022 in the kingdom. Not only the size of the deals, but the amount and the amount of funding disclosed. This is that positive momentum, where momentum begets momentum, and you see people get more and more excited about a community. This is like the number of deals kind of, again, way up. And we can see the dollar amounts high. In terms of where they're happening, obviously the UAE and the kingdom are the two largest areas about what we saw in the first half of the year. And then we saw Egypt, a real strong player of entrepreneur activity. In fact, it's funny, one of my students who just graduated in June is from Egypt, and he's starting a company back in Egypt. And I introduced him to Marach Capital a couple of months ago. So you're starting to see now, hopefully, that ecosystem across borders really start to kind of, everybody starts to partner together and work together, and that enthusiasm gets the flywheel going. Number of deals by country. Again, top countries by number of deals, you can see kind of what's going on. Tremendous activity there, which is awesome, but largely still concentrated in these three areas of the UAE, the Kingdom, and Egypt. In terms of where's it going, food and beverage, obviously, this is lots of ways to transform that. Fintech, transport and logistics, similar to some of the mega trends that I showed earlier. What else are we seeing in terms of Saudi? Again, just the number of deals are happening in particular areas. So not surprising, as we see a lot of the innovation that's happening in other parts of the world now coming and continuing to spread out. So the ways to transform societies everywhere, and the younger generation is doing a great job of trying to apply these technologies and new ways of doing business to improve people's lives. Again, here's another way. Most of the activity so far is very early stage. This is a type of chart that's pretty consistent with what you would see around the world. That usually, you get a flurry of deals at the seed stage and early stage, and then it, winnows out. Companies get bought, companies go out of business. So most of the activity is happening largely in the early stages, which is, again, similar charts that what we would see across Europe, North America, even Brazil and Argentina. Again, so now in my last slide, I'll come back to summarize this. What are the things that I want you to take away about global venture capital in our 30 minutes together? Number one, 2021 was the anomaly. Last year was just so crazy, we almost have to throw it out. And 2022, the trend line has been down, but the numbers right now are not so bad, broadly writ. Like, they're very consistent with what we saw in the previous 5 years. And that's true on a global basis. So we need to keep that in mind, that sometimes it feels bad and we might read horrible things online about what's happening, but it's not necessarily meaning that it's all that bad. Secondly, crypto, I'm a little skeptical right now. And in fact, if I look at even compared to other sectors, like we understand in food tech, we understand in payments how people's lives improve. In crypto, there are very few broad-based, in fact, I can't think of any broad-based solutions, even on blockchain, that are being used widely. And so I think that you're going to see a lot of caution right now, and you're going to see a lot of government intervention, right? A lot of people have lost a lot of money. And when that happens, when government gets involved, innovation kind of slows down. That doesn't mean government intervention is bad. It just means it's generally going to slow down a lot of the innovation. Climate tech, obviously very important to the kingdom, what's going to be transforming in energy. Lots of activity, lots of good stuff going on here. It's not that our use of hydrocarbons are going to go away anytime soon, but I think we're going to continue to see a lot of investment in new ways of kind of reducing carbon in things like food, in things like manufacturing, etc. The global slowdown, don't panic. Don't panic. But a lot of the younger generation has never seen a pullback. I know that the men and women that I teach at Stanford, if they're 30, 32 years old, they've never really seen a global slowdown. I'm old. I'm 54 years old. I've seen many global cycles. And so this one doesn't feel like a panic yet. It just feels like a slowdown, which happens. And then finally, when you think about venture capital, I want us to think about there's still going to be a lot of money coming in, but I have to wonder if we're going to see that going to fewer and fewer funds, at least in places like North America and Europe. In a place like the Kingdom, where it's just kind of getting going and it's very vibrant, you don't have a lot of large established venture funds yet. So that creates also opportunities for new players to come in. And with that is the end of my presentation. I'm going to stop sharing my screen. And so I'll ask my teammates at Jada how they want to do this, whether you want me to kind of answer the questions that are in the Q&A or whether somebody wants to feed them to me. So Athari, if you've got a thought, let me know.
So we have a few questions here, Robert. You can go ahead and choose and pick which ones you think is more important. And for the ones that you already answered, like there were some earlier ones I think you already answered. And please, for the rest of the audience, can you please have your questions coming up so we can answer all of them?
Okay, great. So I see the first one from Abdullah. The question is, when do I think the decreases in the mega rounds in general will stop? It's hard to know. If I could see the future, like that would be awesome. And let me give you kind of the two scenarios. Let me give you the positive scenario. Let's assume that in the first half of next year, the U.S. Fed, slows down the rate at which it's raising interest rates, and we get kind of to a semblance of stability, and inflation gets under control. There's still a lot of money in the venture community, so I think that to the extent that we kind of feel like there's a sense of balance and normalcy, I could see it potentially maybe mid next year that things start to kind of stop declining and kind of flatten out more. And again, people aren't panicked right now, which on a global basis to me feels like a good thing. That's the happy scenario, mid next year, that things start to kind of maybe kind of flatten and maybe even start to see some positive momentum. What could go wrong? Well, and by the way, the other thing that could also help, if China ends its COVID lockdown and they don't have a lot of people get sick from the disease. I think that would be a good thing too. Is if the Chinese economy can, you're going to see that Apple is going to have a horrible quarter because of the lockdown at Foxconn, and that if the Chinese economy really kind of can't produce things, that's going to hurt everybody. So if China can get out of zero COVID, and when they let their people out of the lockdowns, if no one gets really really sick, that would also be a good thing. Now the negative scenario is, I think, twofold. What happens in Eastern Europe, right? What happens with Russia and the Ukraine, and how does that situation resolve itself? And I think that's a potential challenge. And when you've got a live war like that, the risk is that there's unintended consequences. God forbid NATO gets pulled into that. That would be a bad thing. And so I think that there are a lot of things like that could really end up, geopolitical destabilization could make things worse. So I think for business, the best thing that could happen is that the world is at peace, and people and money are moving across borders, and the conflict gets reduced. So I'm hopeful. On the first one, of course, I'm an American from Silicon Valley. Of course, I'm going to be hopeful. That's what we do. So I'm hopeful that by the middle of next year things will come better. But there can be a scenario where maybe it doesn't go as smoothly as we'd like. The second question is, what are the top three sectors that I believe will be booming in the coming years? It's really interesting. There's the question of what's booming. So we think of Web3, crypto, etc. But that doesn't mean there's going to be good companies built out of it. There might be speculation. I do see a lot of interesting things right now in the climate tech space where the technologies are really good and the momentum is good. I'm not so sure that the venture returns are going to be there and how that will play out over time. I do see some interesting things. I think the consumer space is going to get reinvented again. Right now, Facebook and even TikTok, it feels a little stale to me. I mean, TikTok's an amazing phenomenon. It's an incredible thing, but it's kind of like I'm not sure what's going to come after that, because it's almost kind of tired. My Instagram feed is tired. There's a lot more ads in a lot of the social media stuff. I watch what my children do. So our children are 24, 23, and 20 years old, and I watch what they're doing. I actually think might be some interesting thing in music. And some of those consumer things where I think new people are going to be able to use technology to kind of talk to fans, not in the notion of just kind of creators, of people trying to sell fashion online, but I actually think there's going to be interesting things that might happen in the arts with technology, and so that could be of interest. But we're actually at a platform transition right now. The mobile phone, the smartphone is 15 years old, and we don't really know what's next. So it'll be interesting to see how that plays out. Next question I see here back to Abdullah, which is Abdullah says, for the kingdom to generate unicorns, most companies need to scale. What advice would I give founders to navigate? Great question. And when should companies scale to different countries as opposed to staying in one country? All right. When we look at small companies that come from countries with small domestic markets, Australia, Canada, right? We can think of, countries in your region where you've got, it's not a bad domestic market, it's a limited domestic market. What you find is they become global companies sooner rather than later if they're going to get to big scale. You have to. And so what oftentimes you'll see is you'll figure out, maybe sometimes you'll put engineering or product development in one part of the world, and you'll quickly expand sales and marketing offices to other parts of the world because it's important to be close to customers. So I think you're going to see companies, like if I were in the kingdom today and I were young and I wanted to build a big global company, you've got 34 million people in the kingdom, so you've got the largest GCC country, lots of wealth, kind of establish that kind of product market fit, establish the unit economics, and then I'd be looking to put sales and marketing teams in other parts of the world. Foodix did that and is trying to do that across the MENA region. And so I think that's actually a playbook that can be followed. Like you kind of nail the first area and then kind of replicate. But even if you look at what Foodix did, they hired local people in each of the other countries. And that was how they were able to grow. You'll need to bring some people from Saudi to other, other countries so that the culture, the knowledge can transfer over. But building local teams, I think, is really, really important. What should startups have for them to be global? I think you gotta love being global, and by that I mean you've got to love going to other parts of the world and other cultures and other people. In fact, I was joking with somebody the other day. I'm actually kind of bored with Silicon Valley. I've been here so long. I find other parts of the world so much more interesting, and so I think there has to be that kind of like natural joy and curiosity that comes from going somewhere else and bringing products and services and learning and adapting. And so kind of there's that curious mindset, and that curiosity mindset, I think, can actually really help a leadership team. Let's see. What do I think is needed for Saudi-based startups to attract international VC investors? I think it's slowly happening, and I think the biggest difference I saw in my visit to the kingdom was, if we look at the history of the kingdom, it's really kind of just starting to potentially flourish in a way that would attract talent to want to come to work in Riyadh. I remember, or Jeddah, or other cities there. When I was there 6 years ago or 5 years ago with a bunch of students, as we were doing a trip around the Middle East, and I remember asking the students, how many of you would want to move to Riyadh? And these were students from South America, North America, Europe, Asia, and people were even though our trip was amazing and they really got to see the beauty of the culture and the friendliness of the people, I think there was a sense of people were like, well, I'm not sure that they would feel comfortable moving themselves or their families to Riyadh. And I think part of it is like that was a very different feeling than what I had this time when I was there 2 months ago. And I think as the kingdom continues to go through some of the changes that are happening there, people will start to feel more excited and welcome and wanting to like actually spend time there, and they'll feel comfortable being there. And I think as those bonds get built between people and between humans, that's going to really kind of help, bring in venture capital. It's not just going to be about, making money, because that's part of it. But I think kind of there's that sense of excitement and that sense of enthusiasm that will come from I can't wait to go back and see my friends, in the kingdom and stuff like that. That's actually going to help. But I think so much about entrepreneurship comes down to people relations. And so I think that's something that will help. And if the enthusiasm and the energy that I saw there 2 months ago continues to grow as I saw, I think I remain very optimistic right now. Do I think there will be a lot more venture debt in the near future? Great question. So venture debt, I've written a couple cases on venture debt. Venture debt is seen as basically a mechanism to help extend runway. At least in the U.S. in particular, with Silicon Valley Bank or WTI, who are the two largest venture debt players in the United States. Really, let's say a group of venture capitalists comes in and they invest, in in a company, put 10, 15 million in, you might get 2 to 3 million US dollars of venture debt that will be added on that will help an entrepreneur expand his or her runway to have more time. And so it's a great instrument that's non-dilutive for the founders and can also actually be a good investment vehicle for the people who do the venture debt. So I think when you get a vibrant equity and venture capital community, venture debt tends to kind of go nicely along side by side. So I don't see any reason why venture debt shouldn't grow, especially as venture capital grows inside of the kingdom. Next question. Why do I think that the Middle East and Saudi in particular are not following the same global slowdown in VC activities? Do you think this is a lag or a disconnect? I could be completely off base here, but I think if I look at the changes going through the kingdom, they're so structural and they're so fundamental that there's almost, if you will, felt to me like a pent-up energy and excitement and enthusiasm. I think it also helps that the price of oil has been quite high, which means that there's still a lot of capital in the region, which also is looking for returns and everything else. So I think there's a nice combination of high oil prices, which has led to a cycle where you've got capital in the region, and also just the energy of the young people that I saw when I was there. And so I think it's kind of been unleashed, and people are seeing the art of the possible. And so it's not that I think that the kingdom won't be subject to the global slowdown or what, but I think there's also there's just such a big frame breaking change happening in that part of the world that's creating a lot of that positive momentum and positive enthusiasm. I'm hopeful that it continues because it was wonderful to see when I was there. What is my forecast for the future? When do I see them picking up? So I guess I'm going to kind of go back to, I think it's going to be, if everything is fortunate, middle of next year. I think once we kind of get some stability, once inflation's under control, the good news is, again, even in places like North America and Europe, unemployment is relatively low. In Central and South America, what's interesting is in the last 12 months, most of the governments that have been elected have been very left and progressive, tend to be more labor focused, more socialist focused. That could actually hurt that part of the world if they don't have business friendly policies. And we see a lot of class division between the poor and the business class if they're not working together, but if they think they're fighting each other. That could slow down Mexico, Argentina, Colombia, Brazil. Lula just got elected in Brazil, so we'll see how that plays out. But I'm hopeful that by the middle of next year things end up kind of calming down again. Practically speaking, what needs to happen to see more VC-backed company exits for MENA companies? It's funny when we think about exits. So much about exits is about you need buyers and ecosystems where people can come in and they'll acquire a company because they're either going to get a team or a product, or they're going to get the profits of the startup. And so I think kind of companies that actually kind of show traction and show growth will continue to attract acquisition targets. We saw it with Kareem, we saw it with Souk, so I think you could see that if you can show a good business, that will attract you. There's a lot of people, a lot of money, a lot of development happening in your part of the world. So I think kind of getting some of the success begets success. You get the flywheel going, and then obviously I'll be hopeful if geopolitical things stay stable. Geopolitical stability is good for business. Geopolitical volatility is bad for business. Okay, Redwan says, we're currently fundraising for early stage VC fund. What's my advice for an emerging fund managers to close a fund for the first time? Yeah, I had hair when I closed my fund for the first time. What investors tend to be looking for are, do you have a unique positioning? Can you get access to deal flow that other people can't get access to? What's your platform? For example, for me, when I was investing, I taught 5 of the most popular classes at Stanford. I saw every deal that was coming through Stanford. So I had my pick of 400 students a year. So what's your unique access to deal flow? Can you get into good deals and can you pick good deals? And so kind of that in the early, as a first-time manager, you're trying to show that you can get into the hot deals and the deals that have momentum. And so just showing that you're running in that circle of the entrepreneurs who are the great entrepreneurs who know each other, who share deals, who share information. That's what you want to do. It's all about in the early stages, showing that you can get into the good deals and that you've got a unique way of seeing things that other people aren't seeing. What are my thoughts on the future of venture capital, specifically regarding innovation and new approaches disrupting the current winner takes all power law model? I actually don't see it changing. I had a great conversation last night with a bunch of students and one of my colleagues on the faculty. You know, if you think about kind of the risk return profile, venture is about high risk, high return. That's what that is. If you look at where capital, you want to be on the frontier of risk return, whether you're investing in conservative assets or risky assets. You want to make sure that the risk reward ratio is right. Venture capital is about risk, and risk means volatility. And volatility means a lot of companies fail, and you need that one or two to be kind of your force multiplier on the outside. So I think venture is going to end up staying a power law model. I don't think there's a way to play for averages, especially in the early stages of venture. And I think the thing that, to me, the big change is going to be, what happens with this verticalization of venture? Does that, can the larger funds, can they really run effectively? Seed funds, mainstream funds, and growth funds, because the competencies are often different between that. And is there a synergy in that? Like, does the seed fund feed the winners in the mainstream venture fund, which feeds the growth fund? I think we'll have to see if that works or not. But I think the verticalization is one thing to keep an eye on, but I don't think the power law model goes away. All right. The last question that I see here is, where do I see the path of corporate venture building in the next few years? Great question. I think corporate venture capital, the good news is people are really understanding at the corporate level that innovation becomes something we do every day. It's like breathing, right? It's an involuntary muscle. And so corporate venture capital is but one thing like the way that a company and an organization innovates, not only does runs their current business, but also looks for new ways for new types of products. And so what I would say on that is, um, I think that the best corporations will have long-term commitments to corporate venture capital. It won't just be something they do in the good times. You have to do it in good times and bad. You need to understand what's happening outside of your ecosystem and outside of your four walls. And so I think that I'm still bullish, that I think that the great corporations will stay committed to it. And as we get this pullback, they won't pull back on corporate venture capital. The ones that pull back now, those will not be companies that I have long-term faith in, because I think it's when times are bad. With Andy Grove, the former CEO of Intel, used to say, you can't save your way out of a recession, and innovation is something we have to be doing at all times. So I'm actually pretty upbeat on corporate venture building and corporate venture capital, but it won't be, the ones that stick with it through these times, those are the companies that I think I would keep an eye on. All right, I think that's all of the questions in the Q&A, and I'm looking at the time. I know I'm getting closer to the end. Sorry, is there anything else that you want to ask, or is there anything else that we should cover right now?
I think you covered a lot, Robert. Thank you very much. Thank you for this very informative session and all the rich insights on global and local trends. I'm sure that the Jeddah community have learned a great deal from today's session, and we were very fortunate to have you today. Hopefully, we will be learning more from you in our upcoming EMP trainings next year, inshallah.
Inshallah, and salam alaikum to all of you, and shukran, and it's wonderful to see you, and I hope to see you in Saudi on my next visit. And if you ever come to Stanford, feel free to send me a note.
Absolutely. Take note, everyone. Thank you. Thank you, Robert. Have a good day.
Thank you, everybody.